Hello everyone, this is Andrew McNair from SWAN Capital with our January 2015 Educational Economic Update. In this month's video, we're going to talk about some of the major economic events that occurred last month to give you some insight into what it could mean for you as an investor. Now, please stay tuned at the end for a required disclosure statement. January was a very volatile month for stocks, largely because of all the events that happened overseas. Markets grappled with the realization that though the U.S. economy is doing well, global growth is in trouble. And so let's talk about what exactly happened this month. Oil prices, first off, continued to dominate economic conversations. Oil continued its downward slide, and by the end of the month had dropped 60% since last June. Though low oil and gasoline prices are a net positive for consumers like us who are paying less at the pump, analysts worry that oil prices are a symptom of weakening growth to come. And the global growth picture is weak. Both the International Monetary Fund, the IMF, and the World Bank cut their estimates for global economic demand in 2015. Central banks around the world are worried and responded with some major moves. On the other hand, the U.S. Federal Reserve is thinking about raising interest rates. And then we have the European Central Bank, who announced its own bond buying program that it hopes will boost growth in Europe. The Bank of Canada voted to drop interest rates to help fight the effects of oil prices on its exports. So what does this mean? Well, it means that the U.S. and the rest of the world are on diverging paths. We're moving towards a healthy economic growth, while many economies overseas are struggling. The question is will a strong U.S. economy be enough to pull the world out of this slump? That's the big question that has yet to be answered. On the domestic side, the news is a lot brighter. We got our first look at gross domestic product, GDP. The first showed that GDP grew 2.6%, lower than what we hoped. However, consumer spending was higher than expected, indicating that Americans are still buying. While 2.6% is a big drop after the 5% growth we saw in the third quarter, a lot of economic data has yet to be analyzed. So we can hope for upward revisions in the months to come. Fourth quarter earnings, however, also started last month, and the news so far is in line with previous quarters. Not great, not bad either. Looking at reports from 188 S&P 500 companies, earnings are up 6.6% over fourth quarter 2013. However, total revenues are up just 2.4%, indicating that many companies are still struggling with low demand. But keep in mind that these numbers are an aggregate, and there are a lot of individual success stories in each sector. Part of what we do for our clients is we look for those opportunities for growth in every market environment. Now, looking ahead, we expect to see a lot of volatility as investors adapt to the growing divergence between the U.S. and everyone else. While turbulent markets can be very stressful, keep in mind that they often present very good buying opportunities. We're always monitoring markets and keeping our eyes open for these opportunities. So that's going to be it for January's Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, give our office a call at 850-380-9558. That's 850-380-9558. We'll be happy to answer any questions for you. Also, we have a couple upcoming events. If you're a client of SWAN Capital, on February 13th, we have our spa day where you can reinvest in yourself and get a free mani and pedi. So give our office a call to RSVP for that event. We look forward to seeing you next time on our monthly Educational Economic Update. See you then.